TRVL, first let me look at the TRVL against Bitcoin chart. Right. So when you look at the TRVL against Bitcoin, and let me just get rid of a lot of this information. Okay. So we have a fixed range, which is where we can see the volume for the whole of this token from the beginning of this chart, which was from April 22 until present. This is the weekly time frame. And basically, even though it looks like a strong downtrend, it's actually a range. And I think that's what people, when they look at this, they don't quite understand what's happening. The price is split into two ranges right now. And I've put the dividing line here, basically there. So we're in the lower part of this range right now. And then you've got, potentially you've got a mid part, which is there. And then you've got a higher part, which is there, which has the least volume. So you can see the volume profile on the range. There's least volume in the highs. The mid part has a lot of volume, and most of the volume is in the lower part of the range right now. Okay. And basically what I'm looking at is TRVL and Bitcoin moving together at the moment. Yeah, we are in the lower part. So if you break down the whole of the price action into three ranges, we're in the lower range at the moment. But you can also break this lower range into another half where this point of control is. Okay. And so actually we're not in the lowest part of the range. We've come out of the lowest part of the range, which is the point of control. And we've back tested the point of control as support. So right now, if you were to break the whole of this price action into four ranges, we are in this one here, this one here, this one here. So that's really what's happening. So Bitcoin and TRVL are going together in sync, and at the moment we're ranging with Bitcoin. Sometimes Bitcoin is a little bit stronger, sometimes TRVL is a little bit stronger. At the moment we're in the second lowest part, and eventually sometime in the future we'll probably get to the next range, and then we'll get to the next range, and we're still in a range. We're basically still in a range. As long as we're within the parameters of this price action, we're in a range. The time that we're going to leave the range and where we're going to break from the range is when we flip the top, when the price finally gets to the top somehow and it flips it into support, and then we're no longer in a range. Then we're in a breakout. Yeah. And that is when that's alt season. All right. So until that moment, we're just in a range. We're locked with Bitcoin. At the moment, because we're in the lower part of the range, it's probably better to be in TRVL than in Bitcoin, probably. Yeah. Just simply because we're in the lower part of this range, these ranges. Yeah. And then obviously as the price goes up at significant levels, it's better to be in Bitcoin, because then the price will go back down. So if we do manage to get up to the top here, if you find resistance, then it's better to be back into Bitcoin, because then the price can go back down. But you're still in the range. I don't see anything other than that. And eventually we will break out, right? So that kind of helps a little bit to understand. And then the reason why TRVL jumped, quite simply, I'll show you. It's basically exhaustion. So when you look at the price action of TRVL, you can see long higher time frame accumulation. And what's happening is that the sellers are becoming exhausted. And when you get that kind of behavior where there's no more sellers, then you get expansion. Yeah. And then you move to the next level. And that behavior is just continuing. Yeah. So you get more and more price action where the sellers are getting exhausted, when whoever is selling is basically where the price is being absorbed by the longs, by the limit longs. And eventually what happens is the price expands. It just does it on its own. Yeah. Because then you get the buyers continue and eventually there's no more sellers, and then the price just expands and it just moves to the next level. And so naturally now we are, at the moment, we're holding the next level of support. We're on support. We're holding it at the moment. We had a expansion. We had a take profit. It stopped exactly where I suggested. So I identified this SR flip. I marked it down and I said, this is a higher time frame SR flip. If I go to the weekly chart, you can see it. And I said, we need to hold this as support now. This is the support line. And the reason why I said that is because you can see it's been support. It's lost support to form resistance. It's acted as support here and resistance here and here and resistance here. Now that we're above it, you're expecting it to act as support. That's the expectation. You're expecting that line that I've identified to act as support. So when this line, when the price was up here, I was saying that the price should come back down and it should form support here. This is like where you want it to form support for healthy price action. As long as the price, this line is holding support, you can just be bullish on this. You can just continue to be bullish, and it's more likely than not that the price will just range. Now, if you lose that line, and the time frame that I'm using is the weekly time frame. I'm not really focused so much on the daily time frame. And people need to realize that I'm looking at the higher time frame. So as long as we don't get a weekly close underneath that line, I'm okay. So I'm not too worried if the price does manage to get down there for a couple of days and come back up. I'm actually looking at this whole, these are higher time frame support and resistance lines, and that's all that that's what really matters. And so on a daily time frame, you can get really distracted by the price, because because this is what happened here. So we'd broken out of this range here, and we'd flipped this level from a resistance to support. And then for one day, the price lost that line. And then 3 days later, it was back above that line. Yeah, so on the weekly time frame, it just looks like a wick. And obviously on a daily time frame, people thought, oh my God, this is going to zero. Yeah. So if we were to get that kind of behavior, it would look exactly the same. If for some reason we do drop down here on one day and then it goes sideways and it comes back up, on the weekly time frame, it will look like a back test of holding support. On the daily time frame, it will look something like that. Yeah. So I think it's important to just, when you're using this higher time frame analysis, to stay focused on the higher time frame and not get distracted with the lower time frame. And so right now on the higher time frame, I'm looking at a high time frame level, which is being respected on the weekly time frame, and even monthly time frame. If you look at the monthly time frame, you'll see it's the same behavior. So right now, I'm just keeping an eye on it and seeing how the ranges form. All right, that's kind of, I think this expansion is a healthy expansion. It's not over expanded. Like, it's not a crazy expansion. It's just to the next level. And I think that's kind of what you want to see. You want to see the price go from level to level. If we consolidate here for a few weeks, to go to the next level, I think that would be really healthy. Like that's kind of what you want to see. You just want to see this behavior kind of continue. Just to go from, that's kind of what you want to see. And I wouldn't actually mind if we did this all the way up to the moon. Honestly, this would be the most gratifying price action if this happened, because it'd be very difficult for the price to come back down if you created this kind of price action all the way to the moon. Yeah, it would be very off-putting because people want quick gains, but with this kind of price action, it's much more difficult for the price to fall back down. It's much more difficult. All right, so that's a TRVL update. I think if people are going to trade TRVL, that's fine. The best way to trade it right now is to create a... So what we want actually on the lower time frame, what I'm looking at the price action now, and you can clearly see that this line that I marked, look how the price is held. See that? See this price action? I think the best way to trade this is create some kind of volume pool, and trade the volume. So at the moment on KuCoin, I mean, it's very like, when does the price, like usually you do it when the price comes above, but then it goes back under. So at the moment, this is correct. You kind of want the price to just do this now, and then you could trade that. It's not a really big range. It would be nice for the price to kind of test this red line that I have up there, but I think the longer the price is in this price range, the more acceptance we will have in this price range. And there's two types of acceptance. There's time acceptance and volume acceptance, and then there's price acceptance. There are three types of acceptance. At the moment, we have some sort of price acceptance because we are in these prices. What you want now is you want volume to come in. So if the volume starts coming in, then you have volume acceptance, and then you want time as well. You want the price to be here for a long period of time, and then you have all those types of acceptance coming together. And then in the future, what happens is if the price drops, people go, oh my God, this is really cheap, because the price has been at 5 cents for such a long time, and they go, oh my God, bargain, and they just quickly snap up the lower prices because of the acceptance at the higher prices. Yeah, so that's kind of what you want. You want this kind of idea of acceptance to form. Dan is asking, do you have levels where you will sell TRVL? So I am, all right, so Dan, really good question. And right now, I'm not selling simply because I still see TRVL as cheap in the context of its own price history. If I go to the MEX chart, you can see the full history of the price. You can see that the all-time high was at 1.56, and in the context, and the thing is, I'm using the log charts. If I was to use the price charts, the regular chart, and most people will use the regular chart. Like when you look at the regular chart, we're still at the bottom. We're really at the bottom, and then there's a lot, there's a long distance to go to get back to the all-time high. I chart on the log chart, so people don't necessarily see that, and so maybe they think that it's not so cheap, but it is. It's really cheap right now, and I think I want to see 9 cents flip to support. I think that's a key level, and I think it's going to happen. And I don't think it makes any sense to sell underneath 9 cents unless I was looking to trade it, which at the moment I'm not. I'm not looking to trade. And the reason why I'm not looking to trade is because I don't want to shake anyone out. Yeah. Because right now, I think anyone who's accumulating at these levels is accumulating at a good price. I don't want to start trading it and start moving the price around, because I know how to trade and I can technically buy and sell at the right levels. And then for someone to come in a little bit late and get shaken out because all of a sudden they've bought a little bit higher than they should have or could have, and then they're negative 50% in their investment, even though on the higher time frame they're still getting it cheap. Yeah. So I don't want people to be shaken out. I want people to accumulate, and I want everyone to who's entering TRVL at the lows. Anything under 9 cents is low in my mind. I want everyone to be in healthy profit as soon as we break above 9 cents. Because if we break above 9 cents in the future and back test it and hold it, that's it. That's it. It's done. Mission accomplished in one sense, because I don't then expect the price to come back underneath 9 cents ever again, really. It wouldn't make sense for the price to come back underneath 9 cents if we break 9 cents and come back down to test it and hold it as support. In my mind, that would be correct. And then everyone who's accumulated underneath 9 cents will be, if their average price is at the value area high, just for the sake of example, to 9 cents, that's a 1x on their investment. So they're 100% on their investment just from the value area high, if that's their average. And I think most people will be happy with that. And then if they have the confidence that 9 cents is now the floor, then they may never sell. And that's kind of what we want. We want people to hodl for the long term and not really sell. If you have accumulated underneath 9 cents and you have it in your mind that the price will never go back to 9 cents, you may never sell, especially if Dtravel develop the staking application and the DeFi part of the product correctly, and if they do it well, like, then you can just use your TRVL to mine or to accumulate more TRVL without ever having the need to sell, because you're not necessarily worried about the price falling back underneath 9 cents again. I mean, 9 cents is going to be a key level because it's a launch price. And so psychologically as well, once you get above 9 cents and then come back to 9 cents, then new entrants will be like, well, it's still cheap because we launched at 9 cents. So they're not going to still be phased thinking to themselves, well, it went down to 1.9 cents, therefore I'm getting it too expensive. They'll still be thinking to themselves, it's still cheap. It's because it's like I'm just buying this at the same price as the original investors accumulated this before the launch. You know, you're not even getting it at the peak of the launch. You're getting this at the pre-launch price. The pre-launch price is 9 cents. So I think 9 cents, once we flip that, is going to be an unbeatable level, honestly. That I really believe that. And I've seen that with other charts, like with ADA, I've seen that. So I don't see why we don't replicate that idea in the future when we eventually do flip that into support. But in terms of answering your question, I am expecting some kind of 5 Elliott waves. And I don't have it on this chart. So let me go to gate. See if it's on my gate chart. Nope. Yes. And no one can predict Elliott waves. No one knows what it's going to be like. I do have the idea of the ADA fractal that I'm following. So even though we're not mimicking it right now because ADA went down and we're not going down, I do have in my mind something. without wasting too much time. I must have deleted it, which is a shame. I'll have to redo it for everyone next time. Maybe it's on KuCoin. I doubt it's on KuCoin. It should be on Mex, to be honest with you. I must have deleted it. All right. So basically the channel that I'm following, let me just quickly draw it out. It's here. Do a parallel channel from this pivot, this launch price to this pivot to the all-time high. You have to do it on Mex to get the right level. So I'm imagining in this sort of channel. So from the launch price at 9 cents to the all-time high to this pivot, the height, the peak of the relief rally that we had back in February 23 last year. So this is an imaginary channel, and no one knows if this channel is in play or not, but the midpoint looks good. And when you zoom in to the lower part of the channel, there is some kind of sim price action which does kind of look like it might be respecting it. Like, look, see, who knows? No one can really say whether this is right or wrong, but I am looking to see if the price does go up somehow. If we, like at about 20 cents, if we take this high, that would be really good. That's at about 14 cents. And if we overextend into about 20 cents, maybe that's a good place. And then if that's a good place to take profit, then I'd be looking to put it all back in at 9 cents, because then I'll be looking for something down to here. And the reason why I think that might be good, even though it's not, there's a few reasons why I think it might be good. If you do a fib on this chart, it doesn't really align with any kind of fibs on this chart. But if you go to the KuCoin chart and you do a fib pull, just on the KuCoin chart, so this is the thing, charts have their nuances. And on the KuCoin chart, you're coming into the golden pocket at about that level. So that level corresponds, the golden pocket on KuCoin corresponds with the idea of this back test of this channel on Mex. And then also on Gate, there is a bit of confluence on Gate. And on Gate, what you've got is you've got, I'll show you, you've got this high volume candle here. See that volume? That volume corresponds to this candle here. Yeah. And you're coming into that, into this candle. You're coming into this candle. So there's a little bit of liquidity, trapped liquidity in this range here. Yeah. So I think we're going to come into resistance. And I don't know exactly where it's going to be. I'm thinking 20 cents. It could come a bit lower. Like, I don't know. And I just want to see where that resistance is. The reason why I'm interested in this trap liquidity is because there are people who longed back in April 22, i.e. they bought, and then they found themselves in negative equity all the way down to 88%. So naturally, when the price eventually does come back up and they're back to break even, these people will exit. I'm expecting that to happen. The liquidity hasn't been cleared, and in this run up, we only got to here, which was about 13 and a half cents. If you see how it perfectly lines up with this candle, this high volume candle. See that? Perfectly lines. The people wonder why the price stops sometimes at certain places, and it's simply because anyone who entered to buy was looking to exit, because the price had done this. After they bought, the price did this, and so this was their first chance to exit, and it did. This is where it stopped on this candle. That's the candle of interest, this high volume candle. Now you have to bear in mind that usually what happens with these candles is once the price breaches them, it tries to get up the candle. So there are some like levels of interest, and I think one of these levels of interest is here, you know, somewhere in the 20 cents mark. I'm thinking we're going to clear a bunch of this liquidity here, and I mean, if we can go high, the higher the better. And it all depends on how bullish it is and how much volume comes in. But I think that will be a good place to start skimming. And in my mind, what I'm thinking of is to put it all back in. I'm not looking to take it out. So this is the KuCoin chart. I'm looking to take out to put it all back in. And in that sense, I'll be looking to defend a significant lower level. I think if we do go up somehow and get to that level and form resistance, and then when the price does come back, I think I'm not going to catch a falling knife. I'm going to wait for the price to come back down and naturally settle on its own. I'm going to allow the price to do that before I start accumulating or reaccumulating. And there's going to be a reaccumulation period, and wherever the price settles before the price starts to go back up. Yeah. And you'll only be able to reaccumulate if you take profit. Yeah. And you have to remember that. If you don't take profit, you better have enough capital on the side to be able to not reaccumulate, but continuously accumulate. Otherwise, you're going to be just hodling all the way up to the all-time high or higher. And you can do that and just not even look at the charts. But I think a lot of people are looking to increase their portfolios and their position. And I think it's a very smart strategy to let the price hit key levels like between 19 and 22 cents, and then use that value to reaccumulate. Now, I don't recommend that you go all out in that situation. And the reason why I don't recommend that is because what if the price just does that? Yeah. You don't want to be caught out of position either. If the price was to just suddenly do that and you've sold everything, you're an idiot. And I'm not saying you're an idiot, but just whoever does that is an idiot, because that wasn't smart. It'd be smart to take a percentage so that if it does do that, you're still in position, because you're still low, you know, because I still have higher price targets. We're not at the end of the bull market. The time is all wrong. And the project is it's in the early days. We're in the early days, yeah? So you take a percentage out to put that percentage back in. For some people, it might be 50%. You might take 50% of your position out. And if the price does go up and you're still 50% in, okay, no problem. You've taken 50% profit at a key level and the price went up. You're still making money. It's not a big deal. Like, you can't be greedy about that when you're taking profit at key levels of resistance. Yeah. And if you do take a percentage like 50% and the price does pull back to 9 cents from here, then you could, on that 50% that you took out, you could double your travel. So you're looking to increase your travel by 25% if you did that. If you were able to get out at a certain level like 20 cents and the price pulled back to 9 cents and you were to pull all of that back in, then you're basically increasing your portfolio size by 25%. Yeah. So I think it's quite a smart play, but you have to be prepared for the price to also go up like it could. And no one can predict the price action. No one knows about what people are going to do in the future. And if the price does go up, it goes up. And so you're not out of position. You still have a position and you're still in, you know, and you've taken profit. And then with that profit, you could do other things. You could, if the price was to go up and ignore that line, you could put it back in. The next time it does it, it might be like that. You might end up putting it back in the same place or higher up. But the idea is that people have enough capital to defend key levels of support when the price comes back down, to find support after you have an impulsive move up and people have taken profit. Yeah, when they take profit, naturally the price is going to come back down. And so as bulls, what we want to do is we want to have enough capital to defend support levels, but never catch a falling knife. Just let the price settle. Always let the price settle and see where it comes to support before you do that. Yeah. So effectively what you want to do is you want to exhaust the sellers. Let the sellers exhaust. All right. I think that's TRVL. I don't really have anything more to say unless there's any questions. I hope that helped, Dan. I am looking for a wave one impulse. We haven't seen it yet. So that's why I'm almost also hesitating. I'm like, where's our wave one? I haven't seen it yet. I'm looking for a wave one. What's a wave one impulse? Well, we've had an impulse before. So look at this impulse. This wasn't wave one. It could have been a wave one, but it wasn't a wave one. But that's impulsive behavior. Look how many green candles there were in a row. 1, 2, 3, 4. Small red one, then 1, 2, 3 with a big expansion at the end. That's quite impulsive, huh? And for all intents purposes, that was our wave one, except we made a new all-time low. This new all-time low invalidates this wave one. This could have been the wave one, but because of the all-time low, it invalidated the wave one idea. Yeah. If we had held for a higher low here, if we held for a higher low here and didn't make an all-time low, then we would have probably impulsed out of this by now. Probably would have. It's just, that's the psychology of the market is different when you hold a higher low after an initial impulse. The minute you make a new low, then people lose interest, and you have a lot more work to do to repair that damage. And the damage is making a new low. Making new lows in a market is always bearish to make new lows. And so psychologically, people aren't interested in tokens where new lows are being made. And even now we still have repair. The repair is making a higher high on the higher time frame, the weekly time frame. When you make a higher high, that's the first indication of a higher time frame market structure change. You make a nice higher low, make another higher high, and that's where your impulsive behavior, that's where your impulse is going to really take off, because then people see the market structure trade change on the higher time frame, and they see the bullish market structure, and then they just start buying. They just start buying. Buy. That's when we get injection of volume. So actually, I'm envisioning the movement to be much more impulsive towards the end of the bull market, quite simply because we still have to change the market structure on the weekly time frame. And by the end of this bull market, and this is what people don't understand as well about higher time frames. I'll show you. So if you go to MEX, because MEX has the correct all-time high, and if I was to get rid of this now, hide these. All right, so we just have the price now. So we have our all-time high here. We have our all-time low here, right? So in this bull market, the price has to make an all-time high, has to. That's your line in the sand. If for some reason the price is unable to make an all-time high, for some reason, I'm not saying it's going to happen, but for whatever reason, the price is unable to make an all-time high, then you have a lower high. And then the next destination are the lows. And then if you make an all-time low, another all-time low, then you have a monthly time frame bearish market structure. Basically, the project is dead. I would say if we were to create this kind of structure, then it's game over for this project. No one is going to ever invest in this market structure because it's down. It's a lower high and it's a lower low on the highest time frame, which would be the monthly time frame. Yeah. And so in this bull market, we have to make an all-time high. We have to do that. It's very important that we make an all-time high. Otherwise, we make a lower high. Yeah. And when we do eventually get up there, and I'm looking at the monthly time frame now, I'm not really the weekly aside, I'm looking at the monthly time frame. If we do get up there and make a higher high, so you've gone from a lower low to a higher high, then in the future, well, that's good. That's what you want to do. You want to make a higher high, yeah, which would be a new all-time high. In the future, you would have to do the same thing. It's always the same. Then in the future, on the monthly time frame, somewhere in the future, you have to make a higher low. And then in the future, you have to go back up and make a new higher high. You have to do that. And then you have a monthly time frame chart, which is showing a bullish market structure. And then the price will just continue in the highest time frame. It will just continue doing that forever, really. It doesn't, once you've confirmed that, people will just continually be bullish about this project because they'll take profits on the highs and they'll put their profits back into the lows and they'll just keep on doing that forever, really. So at the moment we've made an all-time low. Then this bull market, we have to make an all-time high. It's really important that we do. I think we will. I don't see why we don't. Yeah. And I think that's got everything to do with Bitcoin and it's got nothing else to do with anything else, really. If Bitcoin is going to allow this project to do that. And I think on the lowest time frame that I'm contemplating, which is the daily time frame, I can see that the trend has changed. I can very clearly see that we've made a golden cross. We're into daily time frame bullish market structure. When I look at the TRVL Bitcoin chart, oh, there you go. Look at this. How exciting is this? This is what we want. This is what we were waiting for. This is our moment of magic on the Bitcoin chart, TRVL against Bitcoin chart. We've just confirmed a golden cross. Look at that. See that? So this is where the daily 50 moving average crosses over the 200 moving average, the simple moving average. So that is effectively, we're confirming a trend change against Bitcoin. Yeah. See that? So I think the downtrend is over. I think it's over. I think our downtrend is ended, personally. And I think this is a really amazing bullish development. Look at that. the golden cross is at the point of control, TRVL against Bitcoin. The price is above the golden cross, not far extended. We're only 13% away from the golden cross. That's going to be a very strong support level right now here. It's going to be a super strong support level. So right now, when you're buying TRVL, you're literally against Bitcoin, you're buying it on support. That's what I'm seeing right now. Yeah. So I think the downtrend is over. I personally think it's better to buy TRVL than Bitcoin. But I think it's also a good idea to trade TRVL against Bitcoin too. I think if people are looking to trade, don't trade it against USDT, trade it against Bitcoin. That's how you're going to grow your account and preserve your value. Because for the duration of the bull market, you want your capital to be in crypto. You don't want your capital to be in fiat. Yeah, because it's crypto that's going to expand in value for the duration of the bull market. It's fiat that's going to lose value for the duration of the bull market. So you don't really want your capital to be in fiat. You want your capital to be in crypto. So when I'm looking at this total market cap, look at this. I was contemplating some kind of equal triangle, but actually we've broken out. So this idea is completely invalidated. I can delete it now. And the total crypto market cap is showing a lot of strength. And if we get an expansion in the total crypto market cap value, so on this higher time frame channel that I have plotted, yeah, if we are able to get to the higher parts of this channel and extend on the Fibonacci extension, overextend even to the 1.618 or the 2, then you're looking at the crypto market cap value going from 1.8 trillion to potentially a 7.2 trillion here. And if we go crazy overextending, then 12 trillion here. Yeah. You want your value to be in crypto. You don't want your value to be in fiat. So naturally, if you're looking to trade, it really should be, you should be trading between crypto and crypto, between two pairs. And the best way to do that is to pick a higher market cap token like ETH or Bitcoin and pair it with a super low market cap token like TRVL. So obviously I'm going to plug TRVL, but that's how you're going to be able to increase the value of your portfolio, because your store of value is going to be Bitcoin, and then you can trade it with TRVL for the expansive part of the value. I'm doing it the other way around. Like I'm imagining my bank as TRVL, because I see that we're a small market cap token, and I see a lot of room for expansion in terms of crypto value. I'm foreseeing at the very least the all-time high, at least about $400 million, at least at the peak of Bitcoin. I'm seeing that at the very least, but I don't see why we don't push higher, and I don't see any reason why we don't get Binance, OKX and Coinbase exchange launches. I don't see why we don't do that. They're going to be launching loads of tokens on their exchanges over the course of the bull market. I don't see why TRVL isn't one of those tokens, you know. So there's going to be a lot of interest down the line, and I'm just I think it's a good place to accumulate. All right, that's TRVL. So the news of the day is that we've made a golden cross on Bitcoin. How exciting is that? I'm gonna put that as my title for my video. And let me see on ETH. You can trade with ETH. ETH made a golden cross a few days ago. You can do it on ETH, but on ETH you'd have to do it on Uniswap. That's the problem. So you're paying for exchange fees, DEX fees in ETH. I think with BTC it would probably be cheaper, but you'd have to do it on either KuCoin or on Gates.io. All right, so that's that. I'm gonna do VAI now. Quickly. Someone said that there was, who was it that was saying something?